Hi, I'm Megan Beck. I'm the Chief Products Officer of Open Matters, and I'm here today with our chairman, Barry Liebert, and we're going to talk about how AI is changing consulting. So we're going to cover why is this happening now, right? So what's happening in the technological space, and what are some examples of how artificial intelligence is changing highly skilled industries with highly trained workers where we might not expect to see AI making inroads right away. We're going to talk about a use case. How have we used AI at Open Matters? Barry and I have had to make this transition from consultants to, let's call them technology partners with artificial intelligence. And then what can a company do who wants to make inroads in the AI space? So that's what we're going to cover. We're happy to take your questions throughout, so please offer them up, and we'll interrupt ourselves to address them right away. But I'm going to hand it off to Barry to talk about why AI is changing knowledge workers today.
Thanks, Megan. So if we think about AI as a profound technology in today's world, there's some major things happening. We're not going to cover the size of AI, but we're going to cover two big case studies, how it's impacted the financial services industry, and now for all of us that are paying attention, what does it mean to professional services? And as ex-consultants, Megan from Bain, myself from McKinsey, this has a profound impact. Not to forget the size that the consulting industry is about a $250 billion industry. So if you think about it for a second, we would not have understood the fact that robots can fundamentally alter things. Now, we understand it takes place on the factory floor, and we see how machines have fundamentally altered the manufacturing of cars. But to replace humans with machines that do knowledge work, well, that's a big question for us all. So let's look at one industry, financial services. The financial services industry is massive. It's about $147 trillion in assets under management. And about 50 years ago, a guy by the name of John Bogle, the chairman and CEO, now retired of Vanguard, thought, wow, we can fundamentally alter the price point of financial services and financial service consultants. And what did he do? He basically made available indexing, or ETFs, as a fundamental way to do what's called a step change in the offering of products and services to you and me. Now, that big step function fundamentally changed forever the economics of what's called active management, or think of it as active consulting, me advising you on what types of stocks and bonds you should pick to put in your portfolio. He dropped the price point so much that about 30% of all assets under management are now in index or ETF funds. Now, that's really cool when you think about it, because all of us now have access to making really good decisions. But about 10 years ago, something fundamental changed again in terms of a step function. We moved from index or passive investing to machine-based decision-making called robo-advisors. So we moved from financial advisors to passive products to now robo-advice, machine-led advice. So what's happened in the last 10 years with robots? Well, really cool again. In a step function change, about $300 billion of assets under management are now being managed automatically by machines, by startups like Wealthfront and Betterment. So robots have replaced what was once financial advisors. And in doing that, it changed the cost structure again, fundamentally. Now, that's interesting. But the real question is, has anybody followed suit? And the really big companies have. The biggest institutional investor, BlackRock, introduced machines last summertime. Schwab has its own robo-advisor. But they're not alone. In the hedge fund industry, you have this massive group of machine learning companies like Two Sigma that manages about $55 billion using machines. And in the high-frequency trading area, you have Renaissance Technology with about $70 billion of assets under management using machines. So when you think about it, we've moved from, in the financial services, people to passive to machines that fundamentally alter how you and I invest. And for good reason. What it says is that we're going to go from $300 billion in assets under management, and in less than 8 years, we're going to not grow by one-fold or two-fold, but by 20-fold to $7 trillion in assets under management managed by machines. Now come back to Megan and myself. We're strategy consultants from McKinsey and Bain, and we're thinking, wow, could we imagine Amazon fundamentally altering the economics of consulting? What would they do, like they're going to do in healthcare, to alter the economics on a step function basis, to alter the economics of professional services for decision making, like who do I hire? What marketing program should I offer? How should I invest in products and services? Which manufacturing facilities? Think about all those decisions and think about this. There are 7 million businesses in the United States with 114 million people making decisions every day. Why not offer them robo-advice using machines to make it faster, better, cheaper to access what only McKinsey and Bain offer to large institutional companies? Well, let's look at the numbers there too. In the United States, corporations, whether we understand this or not, are more than just operating entities. They do more than just sell products and services. They are in fact institutional investors. They allocate capital every day. The number is massive, about $650 billion to decisions like who to hire, where should I locate my plant, property, and equipment, what marketing program should I use. So they're spending about $650 billion a year making what's called capital decisions. And those capital decisions are the crux of who they are at the board. Now here's the real problem with that. Only about 8% of companies in the United States are active reallocators. That means they keep doing, I know all of your companies the same way, because here's the statistics, keep doing the same thing year to year and hope, oh my God, maybe I'll get something different, which we know is the definition of insanity, but I'm going to keep doing the same thing. I'm going to build another store and hope I'm going to be an e-commerce retailer. Or I'm going to basically offer doctors, but I'm not going to do it online. Or for that matter, I'm going to build another car and not offer autonomous driving. Now, if we wonder why Ford and GM are falling behind Tesla, it's because they haven't been active reallocators. And Walmart is only now an e-commerce player. They weren't active reallocators. So we thought, okay, we're going to be Amazon. We're going to think about how do we use machines to offer 115 million people real-time advice that would fundamentally be available at scale by machines, a step function change. And as you can imagine, that was not easy for Megan and myself, given we were trained to think, wow, we're McKinsey and Bain. We know it all. Well, maybe we don't. Turn it back to Megan.
Thanks. So I'm going to talk about what we've done at Open Matters and what our journey to artificial intelligence has looked like. So Barry's kind of covered the why now. Whoops, let's see. All right, now, how did we do it? So Open Matters started with a very simple hypothesis, and that's that companies are one of 4 business models, okay? So they can be assets, services, tech, or network. So every company, and it depends on what they invest in, is a profile of these 4 business models. And that's our original thesis and what we bring to the market as consultants. So we started out trying to figure out what can we bring to companies around these 4 business models in order to figure out, you know, hey, a single company, what do they look like? Are they perhaps mostly assets, a little bit services, a little bit tech, and maybe a sliver of network as well? This is our goal output, and with this, we can tell companies what their economic performance is likely to be. What is the trajectory of each of these business models? What does their industry look like and their top competitors? So we have this technology, we have this IP, and we offered it to the market in a very service-oriented way. Barry and I and some analysts looked at the financial reports for thousands of companies, you know, came up with our perspective on what their business models were, and used it to make recommendations on what your trajectory and your economic outcome is likely to be. And we took it to the market. And people were very interested. They thought, this is exciting. I can see myself. I can see some of my competitors in my industry. But just a couple questions. And we kept getting the same questions over and over again. So the first question we kept getting was, hey, can you compare me to Europe? Or can you compare me to another industry? How do I look